India's urban cooperative banks were staring at a mountain of bad loans in March 2021, weighed down by weak governance and outdated technology. Their cumulative gross non-performing assets, also known as GNPAs, stood at a whopping rupees 36,459 crores. A century-old cooperative banking model appeared to be steadily losing relevance in a fast digitizing financial ecosystem. But the latest Reserve Bank of India data shows that UCBs are quietly clawing their way back, with gross non-performing loans declining to around 23,000 crores as on March 2025. Hello, I'm Udit Bubna, and today I will discuss how urban cooperative banks are making a cautious revival. According to the Reserve Bank of India's Financial Stability Report released Wednesday, the gross non-performing asset ratio of UCBs has more than halved from 15.4% in September 2021 to 7.6% in September 2025, whereas the net non-performing assets have seen an even sharper correction, dropping from 8.7% to just 2.5% over the same period. Gross NPA reflects the share of total loans that have turned bad, while net NPA indicates the residual stress after banks set aside provisions to absorb potential losses. The RBI's Trends and Progress in Banking report released Monday attributes some of the improvement to a reduction in higher value loans. Exposure to large borrower accounts of rupees 5 crore and above, responsible for nearly a third of UCB NPAs, has declined from 25% in March 2021 to 23.4% in March 2025. According to Prabhat Chaturvedi, the CEO of the National Urban Cooperative Finance and Development Corporation Limited, NUCFDC, told ThePrint, and I quote, "A key reason behind the decline in bad loans across UCBs is the improvement in loan recovery and collection efforts over the last few years." Founded in March 2024, NUCFDC is an umbrella organization tasked with enabling a digital overhaul, improving governance standards, and providing financial assistance to UCBs. According to Suresh Prabhu, a former union minister and the head of committee that formulated National Cooperative Policy 2025, told ThePrint that while digitalization has helped improve transparency, efficiency, and cost of operations, it alone will not bring down NPAs. He told, "There is also a need for quality management, pre-sanction evaluation methodologies, and constant tracking of industry performance apart from the company." With around 1,457 urban cooperative banks operating through nearly 11,500 branches and serving over 9 crore customers across India, UCBs remain critical to grassroots financial inclusion, catering largely to local traders, the self-employed, small businesses, and lower income households. The RBI data suggests that their balance sheet strength has improved as well. The capital to risk weighted assets ratio CRAR of UCBs rose to 18% in September 2025, up from 12.9% in September 2021. As per RBI norms, UCBs in Tier 2 to Tier 4 categories are required to maintain a minimum CRAR of 11% as of 31st March 2025. Nearly 92.1% of UCBs were comfortably above this threshold as of March 2025. CRAR measures a bank's capital relative to its risk-weighted assets and serves as a key indicator of its ability to absorb losses and protect depositors. A higher ratio signals greater financial resilience. Overall, UCB's net profits after tax reached 5,345 crores, growing by 14.2% in FY25 and almost doubling since FY21, reflecting a consistent rise in profits supported by reduced provisioning on account of improved asset quality. Chaturvedi attributes the improving financial metrics of UCBs partly to sustained efforts by the Ministry of Cooperation, which has been pushing technology adoption and governance reforms. A senior official in the ministry told ThePrint on condition of anonymity that several closed-door meetings were held with RBI, NABARD, the Finance Ministry, and other stakeholders to diagnose the sector's problem and chart corrective measures. Now, over last few years, India's financial sector has witnessed a rapid expansion of digital banking, ranging from instant credit to smartphone-based payments, but cooperative banks largely missed this wave. Closing that gap is now NUCFDC's top priority, with a renewed push to bring UCBs at par with mainstream digital financial services. At the Coop event held in November 2025, Union Corporation Minister Amit Shah launched two new mobile applications, Sehkar DigiPay and Sehkar DigiLoan, aimed at enabling faster and paperless transactions for cooperative bank customers. According to Chaturvedi of NUCFDC, Sehkar DigiLoan will enable paperless access to loans with Aadhaar e-sign and video KYC, while greater automation through Sehkar Credit Engine would make loans approval smarter and faster. The rollout of Aadhaar e-sign, mobile-based onboarding and video KYC is intended to place cooperative bank customers on the same footing as users of commercial banks. Chaturvedi stressed that technology is also critical to addressing legacy weaknesses, as with more technology comes higher transparency. To improve monitoring of UCBs, Sehkar Compliance Monitoring Service of NUCFDC ensures 100% compliance with RBI norms by using automated tracking, alerts, and centralized monitoring. The tool links UCB's core banking data directly with RBI's Daksh supervisory portal, thereby enabling continuous tracking of compliance gaps and cyber incidents. The Daksh portal is RBI's advanced supervisory monitoring system. It is used to enhance compliance monitoring through regular communications, streamlining inspections, and managing cyber incidents. The NUC FDC has also rolled out Sehkar risk-based internal audit service, replacing manual audits with automated and risk-driven assessments. The purpose is to automate a risk-based audit framework for internal audit, concurrent audit, third-party audits, and information security audit. Together, these digital systems are aimed at fixing what the RBI has long flagged as weak internal controls, one of the primary reasons behind repeated failures in the cooperative banking sector. While fundamentals remain strong, the Sahkar Trends report of July 2025, jointly published by NUC FDC and TransUnion Civil, highlights that UCB's loan growth has been modest over the past decade. The loan portfolio grew from rupees 1.85 lakh crore in 2013 to rupees 3.48 lakh crore in 2024, an increase of less than double over 11 years. In comparison, non-banking financial companies' loan portfolio grew aggressively from rupees 6.5 lakh crore in 2013 to more than 20 lakh crore in 2024. The report states, and I quote, even though UCBs offer lower interest rate, many customers prefer loans from NBFCs because they are faster and provide superior customer experience. Now, this has led to shrinking of UCB share in India's total credit market from 3.5% in 2013 to 1.3% in 2024. According to Chaturvedi, the focus on controlling bad loans have forced cooperative banks to become more conservative on loan growth initiatives. But as digital initiative scales, Chaturvedi believes that UCB's loan portfolio will grow as there is a massive scope in the market given India's Financial Inclusion Index that measures accessibility of financial services among individuals and businesses is still at 67% in 2025, according to the RBI. According to Janak Raj, a senior fellow at Center for Social and Economic Progress, a policy think tank, UCBs and NBFCs cannot strictly be compared as they cater to different segments of society and have different business models and growth strategies. He told ThePrint, and I quote, the expansion in balance sheets or loan portfolio of UCBs and NBFCs is influenced by their capital position or their ability to raise capital. Entities with higher capital adequacy ratio can grow their balance sheet at a faster pace relative to others. To expand business opportunities for UCBs, the RBI took some steps to ease norms in 2025. In February last year, the RBI increased the individual housing loan limits for UCBs across bank tiers, up to rupees 60 lakh for tier 1 banks, up to rupees 1.4 crore for tier 2 banks, up to rupees 2 crore for tier 3 and up to rupees 3 crores for tier 4. This have allowed UCBs to enter high value segments dominated by bigger banks. The RBI came up with a four-tier regulatory framework for UCBs in 2022 based on deposit size to come up with targeted regulatory norms. Tier 1 banks have a deposit of up to rupees 100 crore, Tier 2 between 100 crores and 1000 crores, Tier 3 between 1000 to 10,000 crores and Tier 4 with more than 10,000 crores. According to Chaturvedi, RBI is playing a proactive role in regulating UCBs. It is currently in the process of consolidating all regulatory guidelines so that it becomes easy to comprehend and adhere for bankers. Thank you for watching. For more such videos, please subscribe to the Print YouTube channel.